Hi friends, this is Kamal Shah from Swaycharts Consultancy Private Limited. Swaycharts is into trading on technical analysis, and we had recently started with a series of videos on technical analysis. The first series was on introduction to technical analysis. The second one was on introduction to candlesticks, and this is going to be the third series, which is introduction to support and resistance. In this particular video, we are going to cover the basics of support and resistance and what is a market cycle. So now let's understand the two employees that the stock market gives us for free in technical analysis. That those are support and resistance. Why I call them free employees? Because they normally work, and if they work properly, we can make good money. So let's understand our two employees, right? So the first thing that I would start with is, do we recollect the two important terms in economics which we learned even in school? Those are the demand and supply, right? So this demand and supply is what drives your support and resistance. How? Let's see that. So whenever we know that the demand increases for a particular thing, what happens to the price? So if I say demand rises, can anyone say or guess what will happen to the price? Right? The price also rises, correct? And whenever there is increase in supply, so if the supply rises, we know that the price falls, right? Because more the supply, the price will come down. Right, so with this respect, let's understand support and resistance with respect to stock market, right? So let's see what is the support. So support is nothing but it is found where the demand is more than supply. So at this level, right over here, we see that the price is actually going up and not further going down, even at this level. So when it is falling, it comes and halts here. Again it comes and holds here. So this levels are been said as support level in market, and what it means is that at this levels, when the price comes, there is more demand in the stock than the supply, and that is the reason why the price is rising, and this is called as the support in technical terms. So it can be just a horizontal line at which the price is normally coming and bouncing upside, right? Now let's understand few things. If this is acting as a support line and if this has been broken, so if this employee fails to do its job, the price is going to further deteriorate and it goes down. Now this happens in the case of decline or degeneration phase of market cycle. What is market cycle? We will see soon in this video, right? So just hold on till we reach that particular level. So now we know that the two things that support helps us to do is, it can help us initiate a good trade at this level to go long onto that particular stock or index, because we know that the price is at support, and from this it can bounce. So it helps us to initiate a good long trade. And second thing that it helps us is, if the support does not do its job, then we can set a stop loss for that particular trade just below the support line, right? So now let's see what I'm saying here is, so it helps us to initiate a long position, it helps us to define stop loss, and the third thing it helps us is to cover our short position. So if we have sold something at a higher price, so if you just see here, if I have sold something here, because this is the level which has been constantly been resisted by the market, so that means if I sell something here and if it comes down till this level, I know that this is a support line, I can cover up my short position at this level, right? So this is the two things, three things which the support can help us with. One, to initiate long. Second thing, define stop loss, and third is to cover short positions. And now the disclaimer says violation of support level indicates possibility of further decline. That is what we just saw. Even in this case, like if this particular levels are broken, the price will fall further, right? So that's what a support is. Now let's see what is resistance. Now resistance is nothing but the top or the supply zone. This is the place where the supply exceeds the demand, so that the price then falls down, right? So this is the level where we see that there is going to be resistance, and from that level we see that the price is moving down. So whenever the price moves down, those levels from where it actually takes a U-turn is said to be the resistance level. Now if this is acting as a resistance level, and if my price can pierce it and go higher than this, that is where it can have a further rise in the price and it will move higher. And this happens when we are in the advance or growth phase of market cycle. One thing that it can help me is if I have purchased something or bought something at this support level and it is coming up to the resistance, and the resistance does its job, which means it pushes the price down. So that can be the level where I can book my profit of my long trade that I have taken up at these levels. Second thing is it can help me initiate a new short trade so that I can sell it at a higher price, and then when it comes down I can buy it back. So that is it, what it can help me to do. And lastly, for my this particular short trade, I also need to know what would be my stop loss. So when my reason to take the trade is that the resistance is doing the job, if it fails, so just little higher than my resistance, I would be able to define my stop loss, right? So that is what three things this resistance can help us to do. It can initiate a short trade, it helps us to define stop loss, and lastly it helps us to cover the long position that we would have taken at the support, right? And then the violation of resistance can indicate further upside in the market, right? So this is what are the basics of support and resistance. Now let's understand the market cycle, right? So this is what the market cycle looks like, and this needs to be understood because I don't know how many of you would have faced this situation in stock market. I buy and the price starts falling, and I sell and the price starts moving up. So if this is something what you have experienced already in stock market, then let's understand where your entry was and where it can be to correct that situation in your trading in future. So now let's understand this with this starting from accumulation phase. So this is the phase at which there is lot of buying happening in a particular stock or the index, and the price is going to be range bound. It is not going to move in a range out of the range. So let's see, it has been kept between 80 to 100, right? So the price remains in the range of 80 to 100, and a small quantities of this particular stock has been accumulated by the person who is interested to in this particular company. So what he will do is he will keep buying at regular intervals in small quantities until he has gathered at least 95% of his total quantity that he wants to buy at these levels. Once it is done, he will then do a breakout with price. So 80 becomes your support, 100s become your resistance, and now the price moves above 100, and he will also enter with the remaining quantity in one go, which means there is going to be a huge volume and the price goes above 100, right? So that is the signal of a technical breakout. So at that level there is going to be an opportunity for a technical trader also to enter into the trade. So now what happens in the market is, in this phase only the person who is accumulating the stock is interested to buy, and now at this phase when there is a technical breakout, these people are still going to buy because they keep adding the stock at all the levels before they wash their hands completely. And now we have fresh demand in the market by all the technical traders, because for them it's a technical breakout, which in sense actually adds up to the demand for that particular stock. So now let's say that above 105 there is entries been made by the technical traders, and there is also the accumulator himself still buying it. That particular demand pushes the price more higher and it goes till 140 level. So now at 140 it's going to attract many other people as well, because people are seeing that this is now bouncing from 80 to 140, and then there is a more potential for the growth. So that is where there can be more people who are interested now at this level to enter into that particular stock. Now if you recollect, the resistance over here was broken. Now there can be a resistance at 140 which can be broken because there is a huge demand here, and that is what we said, that whenever the resistance are broken in the advance in the growth phase, the price moves higher. So now at this level where there are more parties interested to buy into the stock, the price moves rapidly higher and it goes up to say 180 level. So now we reach the place in the market where every common people is asking us what to buy, and they think that this is the stock which is in the move and should be bought, and that happens. So this is the place where the retailers are now eyeing to enter into the market, and that is the maturity phase of this stock. Because understand one thing, the guys who are accumulating here have huge quantity. Technical traders, mutual funds, DIIs may not be able to digest all of them at all, and that is the reason why the accumulators are actually waiting for retail participation to happen into the market, where they will then start distributing what they have gathered at a higher price. So this is the actual levels where you might see even the rickshawala and the panwalas asking you what to buy, and normal sense makes it about the same stock, because when someone asks you what to buy and you are making money in that stock, by natural you are going to suggest the same stock to everyone. Even when you are answering your friends and families, you will say buy this particular stock because this is on a move, and you always feel that since there is nothing deteriorating in this part of the cycle, you feel it's still going to rise. So that is where more and more participation comes into the market, and that gives an opportunity for the accumulator to start distributing and washing their hands off, right friends? So that is the place at maturity. So from the price moving from 180 to 200, you get many people now interested in the stock in the retail segment, and that is where the distribution starts. The price again goes into a range bound movement. It goes between 180 to 200, and this now forms here another sideways market where you get a support and a resistance. At support is at 180, resistance at 200. The price oscillates between here, and then finally when the last piece of the quantity are to be sold, it will be sold with a bang. So huge volume to break below the 180 mark, which is the support, and the decline phase starts in the market. So now if you recollect, in the support definition we said that supports are broken in the decline and degeneration phase. So these are the levels of support which now starts failing to hold on, and that's when the technical trader now adds on to the more supply, because he entered at this level for being a technical breakout on the upside. Now this he cites as a technical breakout on the downside, so which adds on to more pressure or more supply for the same stock, and that's the reason why the stock starts falling rapidly and it starts breaking all the supports, and the price falls into the degeneration phase, and then before anyone can think about it goes to the death phase. And this is the phase at which the retailers feel that they have been trapped and they would like to even come out of this particular stock and book the loss. And that's the reason why for the retailers, friends, listen this very carefully, for the retailers, they feel that market is being played by bigger players. It's not their cup of tea because they are not actually aware of the correct entry and exit levels. So that is which is more important in the market, is the entry and the exit. And if you see the technical traders, the smart guys, they enter here and they exit here, which is giving them at least 80% of the price hike. Whereas the retailers enter at this level and then they lose almost 80 to 50% of their capital, and because of this losses that they keep doing, they don't feel it confident about entering into the stock market. So now you have to understand where you want to be in the stock market cycle, right? And then when they sell, the accumulation starts again, and then the cycle repeats itself. Friends, in stock market, history keeps repeating itself. Now, if I am saying this, let's understand this with respect to our indexes. We know that the first crash that happened in the stock market was in 1992, when it was Harshad Mehta's crash in the market. Then if you recollect, it was Y2K or 2000, Ketan Parekh, and the IT bubble burst, which was 2000. Then was the US subprime issue, which brought the entire world market down. If you recollect the year, it was 2008. And then when we had a China meltdown, which was again 2016. So if you recollect, how it has been done is 92, 2000, 2008, 2016. So every 8 years we are seeing that there is a crash in the Indian markets. So friends, now do you have anything to say about 2019 elections? Right? So we know now crash in the market can have in 2024 and not in 19. So just be cool. Whatever government is formed, we might still see an upside in the market, and that is what this market cycle helps us to understand. Second thing, I talked about just indexes. This market cycle can happen in any good stock, and it can happen on any time frame. So it can be in an intraday, it can be also in a week, or it can be on a month-on-month basis. So you need to understand what is the market cycle currently for a current stock or the index before you enter into that trade. Hope this particular video and this knowledge on market cycle and support and resistance is helpful to you. Like our YouTube channel Sway Charts, subscribe to it, share it to more and more of your friends and family, and save them from the wrong entry and exit into the market. Thank you, friends.